Are you looking for a safe and consistent, and possibly even what some people might say, a boring dividend stock to buy? In today's video, I'm doing a breakdown of why Verizon is a better long-term dividend play than its competitors like AT&T, and why I continue to add it to my portfolio. Of course, dividend stocks are a great way to build money in a passive manner and grow your portfolio over an extended period of time, because you don't have to really worry as much about the volatility compared to other high risk stocks. But if you're going to add a dividend stock like Verizon to your portfolio, there are a couple of factors you need to look at or to analyze to help maximize your return. But just don't take my word for it. A lot of analysts are saying Verizon has a solid future ahead of them in the coming months and years. Earlier in the year, even Warren Buffett added over $8 billion worth of Verizon stock to Berkshire Hathaway. And as of June 29th, at the last reported date, Berkshire Hathaway still owned over $8.8 billion worth of the stock. Verizon right now is trading at $54.37 a share at the time of this recording. But some websites have them labeled as a moderate buy with a possible median target price of $62 over the projected next 12 months. But when you look at a dividend stock to buy, there are certain things to look at, such as dividend yield, dividend growth, as far as the payout ratio, what the overall business model looks for the next couple months to even the next 5 to 10 years, because again, you look for that stability of a company and not really the ups and downs that you will see with lesser companies. So let's compare two companies that are very similar in nature as far as being a telecom giant and what they offer, because they both have a great dividend payout right now. Although AT&T currently has a higher dividend yield at 7.6%, their 10-year return has not only been really disappointing to most of us investors, but it also has decreased over 2%. So let's look at Verizon now. While their dividend yield is only around 4.7%, the past 10 years they have increased over 51%. Another factor to pay attention to is their dividend payout ratio, which currently sits at 48%, which is a pretty good number compared to AT&T. But here's why that dividend payout ratio is so important. The dividend payout ratio is the ratio that it pays out to its shareholders of the net income from the company. Companies like AT&T have over a 64% dividend payout ratio, which in short means they have to spend more money of its profit to pay its shareholders. For example, AT&T has $100 worth of profit after everything is paid for. Well, they have to spend $64 of that to shareholders. Verizon, on the other hand, if they have $100, they only are paying out $48 of that $100 to its shareholders, which in return means they have more money to expand, grow, research and development, or to really pay down debt, which is a better overall forecast when you look at the financials of a shareholder as it looks to continue to buy into that company. And to help sweeten the pot even more, back on September 2nd, Verizon come out and announced they were going to increase their dividend to 64 cents per share, which made it the 15th consecutive year they have now increased dividends. Now, although Verizon hasn't really produced the huge growth numbers anyone would like to have, me included, they have posted a 10% year-over-year revenue growth this past quarter, and quarter two this past year had a lot of records within it. Verizon has come out and said they have an aggressive plan to continue to grow and build its overall customer base with their 5 vectors of growth. Just this past month, the Department of Defense announced that Verizon would install 5G capabilities at over 7 Air Force Reserve bases, although unfortunately the announcement did not say how much the actual deal was worth. Last year, Verizon came out and said that them and TracFone were trying to do a complete merger. They had to go through obviously a lot of hoops. But now that the merger is complete, Verizon has opened himself up into another customer base. Verizon's actual merger with TracFone was valued at over $6 million, which now gives them access to over 20 million new subscribers and an overall tighter grasp on the low-income wireless and value phone market. Now, if you do not have Verizon in your portfolio currently, at least now you have a little more information about it, so it can at least be on your radar and let you continue to evaluate it and research it to see if it fits your investment strategy. As Adam and I always says, please don't invest based off our opinions. This is our sole opinions and thoughts. Do your own research or reach out to a certified financial advisor and determine what fits your path moving forward to financial freedom before you invest your hard-earned money. That's it for me today, guys. I hope you enjoyed the video. Don't forget to throw some comments in there. And as always, we'll see you on the next one. Later.